Hello everyone, this is Dr. X, welcome to my channel. Speaking of stock market, you may have been confused that some people are watching candlestick charts, someone looks at company news and another group of investors attend earnings call for every company in their watch lists. Actually, these are 4 different types of stock investments. I hope you can find the one which suits you best after this video. Now let's look at what are these 4 investment types. Type 1. News speculation. This type of investors keeps a close eye on the detail of news, political changes, and industry trends to determine whether a company is going to generate good news or bad news. Then they will be long a stock for good news or short the stock for bad news. Usually these pieces of news are strong enough to impact the stock market, so the news speculators can make profits. But such fluctuations are often in a short period of time and those news speculators are generally day traders. Therefore, it's super short-term investment strategy. Type 2. Technical investing. These people focus on stock charts and don't care about news or financial reports. One of the most popular charts is candlestick chart. For example, the body of the candle is short with a longer lower shadow as a bullish pin bar, which signals that a stock is nearing bottom in a downtrend. On the contrary, if the long tail is facing up, it forms a bearish pin bar, which means that the strength of short selling is back in control. Many people combine the analysis of other metrics such as moving averages, RSI, MACD and Bollinger Bands to make better predictions. There are much more technical tools out there to use. If you are interested, please leave a comment below and we can go through them in the next video. Type 3. Value investing. Value investing is a long-term investment strategy. Warren Buffett belongs to this type. It simply means buying a quality company stock that appears to be trading for less than their intrinsic or book value. In order to determine whether a company is doing well, it is necessary to analyze the company's financial report to see the capital flow and the health of its assets. Does this company have a competitive advantage? And whether the management has a reasonable planning for the company's future. After selecting a well-performed company, value investors actively track its stock price and purchase it when they think its price is underestimated. An important indicator is P/E ratio. Price to earnings (PE), which shows the company's track record for earnings, is often used to determine if the stock price is not reflecting all of its earnings or undervalued. Warren Buffett said, "Price is what you pay, value is what you get." Type 4. Dividend investing. Dividends are payments a corporation makes to shareholders. When you own stocks that pay dividends, you are receiving a share of the company profits. Dividend investing allows you to create a stream of income in addition to the growth in your portfolio's market value from asset appreciation. Similar to value investing, dividend investing is also a long-term investment strategy. Both two strategies pay attention to whether a company is operating well. But dividend investors are more concerned with whether a company can pay dividends consistently. The important indicators to judge this point are DPS and EPS. DPS represents the dividend received per share, and EPS stands for company earnings per share. A prolonged period of EPS underperformance is usually a sign that the company's earnings will struggle to sustain its current dividend payout. In this case, dividend cuts are very likely to happen in the near future. The entry point for dividend investors depends on dividend yield. In general, the lower the stock price, the higher the dividend yield. These 4 types of stock investing have different exit strategies. The news speculators and technical investing need to set up a stop-loss point because the first 2 types are short-term and completely dependent on the direction of the stock price to justify their initial judgments. As for the latter 2 long-term investments, short-term stock price volatility will not impact their confidences of the company. On the contrary, they may increase their positions. Because the cheaper the stock price, the greater profit margin in the future. However, they will consider selling when they are worried about the company's own prospects or the company stops its dividend distribution for some reasons. The stock market keeps floating is because there are 4 types of investors who buy and sell with different strategies and purposes. In fact, you can make money by choosing any of these 4 types of stock investments and be consistent with it. But if you don't understand the differences among them or change your mind halfway, it can bring a huge loss. For example, so many people choose to invest a good company for a long term but actually end up with a panic selling when the stock falls in a short period. Also, how many friends who are speculating on the news refuse to stop their losses because Buffett's bargain hunting strategy just comes into their minds all of a sudden? Understanding different types of investments and choose the one which suits you best is a good start of investing. Hope this video is helpful for you. If you like my video, welcome to subscribe, thumbs up and share it with your friends. I'm Dr. X, see you next time.